Hi, this is Tom Alexander with Alexander Trading, and I want to share some analysis with you. I'm going to use the ES as an example, but this could be the Dow, it could be the Russell, it could be the NASDAQ. All four of the primary U.S. trading indices are extremely highly correlated. So everything that I talk about in here in terms of levels pertains to those four primary stock indices. The other thing that I really want to highlight here is how to view the market through the auction lens. And we're going to use the profile graph. And Market Profile is a wonderful tool for helping you to understand what is going on, understand market condition through the lens of auction market principles. But you have to be careful when you're using the Market Profile graph because it's chronologically ordered in a certain way. What you're looking at here is a profile view of each month of trading in the ES. So this is October, this is November, this is the December auction, and this is the January auction to date, as chronologically defined by months. So if I split out December, you can see that each individual letter is a day of trading. So instead of bars, we have letters. But the unique view of the profile graph, it highlights transaction activity on the horizontal scale of the screen, so it helps us to determine a level of value where the most trading occurs is the market recognizing that area as the most value. The market is driven towards trade facilitation. I'm not going to get into all the concepts of auction markets and how they work, but I do want you to understand it's important not to get caught up in the chronological constraints of the market profile graph, so that you can look at the profile graph and use it as a tool, but you still have to think. You have to think in terms of what is this auction that we're presently in doing. So if I take a look at the December auction, I can get a closer view. I can go inside the auction by splitting it out into its individual days. I'm going to do the same thing with the January auction. Whoops, I thought. Okay, so we split out January, we split out December. Now, this is a real interesting view. And what you're looking at here, you have a very vertical move down, and then you turn around, you have a very vertical move back to the upside. Now, an auction develops following a basic three-step process. You have a distribution, i.e. a trend, and then you have a stopping price around that trend, and then you have development. Well, okay, let's see if I can find a squiggly tool. Here you go. So then you have development around that. So we really didn't have much development to the downside, did we? We sort of traded down and then we V-bottomed. So let me go back up here and get rid of some of the text here. So is this really the auction? So I'm going to go down here and I'm going to remove the splits again. And this is how the January and the December auction appear at this point in time. But is this really telling us the true story of what this auction is about? Is this an auction, and is this a new auction? And the auction process is in effect in all degrees of time all the time. You can't really put chronological constraints on it all the time and get an accurate view of what is going on. This is a wonderful example of what I'm talking about. So if we split this out, really what you have two auctions. You have an auction, this is a distribution and an auction that stopped really on the 24th on Christmas Eve. And then you had an immediate auction, new auction begin the next trading day, and we're in that auction now. But because of the constraints of how the data is compiled, you lose that view. So I can take this is a little more helpful in terms of what the present auction is, but it's still incomplete. So what I have done, I have taken and manipulated, and I've ended this auction here, and I've put this information, the last 4 trading days of the year, into the January auction, which is really what it is. And when I do that, this is what it looks like. So now this is the December auction, and I've split it out. This is the January auction. This is a much more accurate view of what's going on right now than the rote way that a computer program combines this because of chronological constraints. Now, if I take this view, this is the view now, the modified, adjusted view of the auction. This is the December auction, and this is the January auction. Now, this is close to what we see here, but it's different in a couple of important ways, very important ways. So if we come over here and look at the modified view, what we see here, we have really strong rejection of this price level. So going forward, if we turn around and we revisit this level, this area right in here around 2400 is going to be very, very important. Now, to the upside, you can see we're into some volume over here on the horizontal scale from December. Now, back on, and you can see we're beginning to extend a little bit to the upside. Now, back on last Tuesday, I wrote a report for Wednesday, the 16th. And in that report, this is what the auction looked like at that point in time. The ES closed right here, and I said the stock indices continue to show strength through higher prices. The indices are just below the level of potential resistance. And this is what's most important. The profile view of the ES below suggests a developing high volume node and the ES trading above it. This suggests immediate range extension of the January auction to the upside. My apologies for my typing and misspelling. But so my read into this, I wasn't looking at this as a profile, I was looking at this as an auction. And this auction at that point in time looked incomplete, which led me to the conclusion that immediate range extension in January to the upside was likely. And that's exactly what we're having. Now, there's the present momentum in the stock market, and I've covered this extensively in the last few nightly reports that all of you should be receiving. If you're not receiving them, just go to the website and sign up for the newsletter, or send me an email at tom@alexandertrading.com, and I'll put you on the list. But this is where we closed on Friday. Now, I don't think we're going to turn around and stop on a dime in here. Momentum is too strong. What I think is more likely, I think what we're going to end up doing is trading up into this area. Now, I'm not saying we're going to do that immediately, but I would not be surprised if the present auction doesn't carry up into here eventually before there's any significant retracement. So if that's the case, we're going to see further rally in all 4 of the primary U.S. trading indices. Don't think it'll be a straight line, but I do think the market is likely to be sideways to up, maybe get a little bit choppy And then this, if the market does reach this area, this will be a really, really interesting area to see how it develops. Now, the other thing I want you to notice, this was a really vertical auction. So far, this has been a very vertical auction. And if we launch next week into here, the probabilities of retracement and some probing are huge. So I don't think you're just going to scream straight from here to new all-time highs, uh, like you may be seeing a lot of people suggesting. I think, remember, you're looking at the market through an auction, and this auction process is in effect all the time. It can be an incredible guide and hint about future price action. So that's what I'm thinking is going to happen. I think we're probably going to eventually trade up into this area before we stop on a dime, as opposed to stopping on a dime and turning down from here. This auction structure just looks incomplete. So I think there'll be more upside. I don't think the present rate of change will continue, but I do think there'll be more upside, and you'll begin to see more of the development in the auction range for the month of January and the present auction that is in effect. Hope you found this helpful. I'll talk with you again soon.